Welcome to the Pump and Dump channel for another video, this time looking at natural gas and then the shipping rates. So first of all, here we have the natural gas price. We were in 2018 we were at a high, and we've been going down ever since. We kind of crashed into 2019. We formed this bear flag. This is kind of where I was trading CNX and Range Resources last year, and after that we came down into this downward channel, and around March, after the March meltdown, we broke out of it and we kind of have built another bear flag here. That's what it looks like here on the continuous contract. You can see we broke below it recently this week, and we've built a bear flag here suggesting we're going lower. The Dow Jones also seems to reflect that we are going lower. So there's cause for concern that we might just fall down in this channel and just keep going down over the next, I don't know, month or two. Who knows how low it could go, but if it goes below 150, then we will start seeing a lot of natural gas production coming offline from primary natural gas producers like Cabot Oil and Gas, and maybe also EQT Corp and Antero Resources, and some of the, let's say, some of the other more flimsy companies like Antero Resources. The real issue here is quite simple, that it looks technically like it's going to go down because of the July contract here being at 167, but you can make the case for, with the August contract being at 175 approximately, that we could jump back into here. And if we look at the rest of the term structure going into the winter months, being November, December, January, around those are the highs for the year. Those are trading around 280, 290, let's say, on average. So we could see the natural gas price coming back up into those months, especially if something happens like last year with the geopolitical stories about Saudi Aramco being attacked, and then that general being killed in January. We could see some some news that actually gets this price back into this channel, but on the technicals it does really seem like it's this technical pattern of going down 1, 2, 3, 4, 5, and if we do go down again into this range here, we'll probably build an inverse head and shoulder and maybe come back up to, who knows, to 3 or maybe even to 350. There is obviously no certainty in this here, so we cannot necessarily only rely on that. And of course, when I talk about the stocks here for the theoretical model portfolio, I'll be talking about CNX and how CNX fits in here, what the upside and downside is to it. But before I do that, I'm going to, of course, talk about the shipping rates. So I've talked about the tanker rates when I was adding DHT yesterday to the model portfolio, and today I'm going to be talking about the dry bulk rates, because they have been improving day after day for quite some time on the spot, on the spot rates, and the charters are also starting to follow suit quite strongly. You can see here the headlines: dry bulk market rates skyrocket, blah blah blah. The macro here is around, I think, countries in companies in countries like Brazil, Mexico, where the government ordered mining activities with all the other economic activities to be shut down because of the coronavirus nonsense. And if you look at Vale in Brazil, the big iron ore producer, they are in this situation where they now want to start shipping out more iron ore, especially now that prices are high. They want to ship out more iron ore to take advantage of that, so they're obviously going to start coming into the market and representing more demand upon these vessels that are available. So when the demand comes in, they'll have to bid up the charter rates for those vessels that are still available, or go in the spot market and pay whoever has the vessel that's available to transport the goods from where they are to where they must be. And therefore the macro for the bulkers has improved considerably. For the tankers here, of course, the opposite is more the case. It's like OPEC, they are talking about shutting down production for July, and well, not shutting it down, but like reducing it and complying with the cuts and all this stuff. So the macro here is, of course, bearish on the tankers, but you know, in terms of valuations, it does make sense to hold a tanker, because you can see going into the end of the year, like when the price for oil has picked up and improved a bit more. Of course, it does look like we're probably going to top out soon on the oil price and then go down, have a pullback, and then maybe in the second wave in a few months we go up again. And then when prices start surging after there's more, you know, shut-in production, then you know, the oil production, the exports from countries will start increasing at some point, and then the rates will improve. But overall, like, you know, the macro for the tankers is not necessarily that great, but the earnings are still good from what we had in Q2 and Q1, so we'll see how that goes for the HT. But getting back to the dry bulkers, we will look at these two stocks here in a bit more detail, but not too much detail, because I'm not presenting a stock, I'm just explaining why I'm buying something. I'm not giving like all the knowledge I have about them, obviously, because that would take several hours to explain everything. So as you can see here, I put in this this line here. So CNX at 981 is a buy, because on my valuation it's worth 1080, and that is like the current valuation that I have for the stock at this particular point in time. The issue here is, of course, that that could drop if natural gas price deteriorates over the next weeks and months. But you know, it's not necessary that I'm only going to buy CNX and hold it until I reach this price point, this target. It could be that CNX is trading down at $9 a share, and the 1 year target is on only, like, let's say 950, and I have a different company that's, I don't know, let's say it's Cabot Oil and Gas, and let's say for Cabot Oil and Gas my fair value is 15 and it's trading at 10, then I might say, well, I'll sell my CNX and buy Cabot Oil and Gas. You know, that's something that could happen, but for now, I mean, this is where it's at. This is what it looks like. I have CNX in my portfolio for 1,000. 1,000 is because of the upside only being about 10%, and you know, it's a very stable company. It's low risk in my opinion, but low risk does not mean that it will go higher. Low risk just means that it won't be down like $3 in 1 day if the natural gas price drops by 3%. You know, it's not that kind of a situation. But anyway, getting to the next one, Safe Bulkers here. Reason to buy it, I mean, I've done the valuation of the company, so my current valuation is around 185. So this is the situation for many stocks in many industries, not just for Safe Bulkers. You can see here that the stock bottomed out in May, and it's been rising. It had this move up here just last week, and then it pulled back, and it's in an upward trend because the rates are improving. So what I think we'll see here is like a triangle forming, and from that triangle we'll probably burst to the upside, and we'll get to that 185 or maybe even higher if the rates keep improving and the sentiment comes into this sector. And yeah, this is just, you know, this is a simple company. It's just tankers, or not tankers, they're just ships that carry grains, iron ore and coal and other things around the world. So they just, or aluminium, they just transport things. And here it's just about the arbitrage between what the stock is worth under certain circumstances. And at this point in time, we see that the rates are improving for what they can achieve in the market if they charter out their vessels. And once the once the investors get over their nervousness of jumping on board here, they'll start pushing the price up, and that's kind of what I'm thinking will happen, is that the valuation is rising but the share price is just going sideways, and it's just going to be a game of wait and see until this starts pushing to the upside. So that's going to do it for this video, short video. Just remember, this is a theoretical model portfolio that I'm building going into the end of the year. On the 31st of December, I'll draw a balance and see where we're at. Maybe I'll even do one after the third quarter is well, when we get to the end of the third quarter, I might do another video. But you know, just summarize how it will go. And you should not take any of these picks I put into here as investment advice or recommendations for you to buy or not to buy these stocks. It's something that you need to be aware of, that when you're listening to someone on YouTube, you should know exactly what you are doing before you put money into picks that people are talking about on YouTube, or you should have a huge degree of confidence in what the person is doing and how he's performing, because obviously you know, the Dow Jones is in a downtrend. I can see quite clearly that it's going down, and these stocks here are more likely than not in the near term to go down. And if you buy one of these and then like it's down 5 or 10% in 2 weeks time, you might get a bit worried and you might think that, you know, I'm wrong, and you jump out, and you know, maybe I am wrong, and you jump out just in time, or maybe you jump out and it turns out I'm right, and then you like regret it. So it's you know, it's a difficult situation. You should have some degree of confidence in people before you start trusting them with your own money, because especially in these times where there's less and less jobs around for earning money, you know, you find yourself in a situation where money is hard to come by. So if you risk it on some stupid stock like Nordic American Tankers, you're going to be destroyed, and that's just going to be the logical outcome of the situation. So I'm going to leave it with that. As mentioned, this is not recommendations for you to buy or investment advice. You should do your own research, and if you like the content, you should consider subscribing. If you want to leave a question, comment or opinion, you can do so in the comments section, and I'll just say have a good day.